All righty. So this is 11/23/2004. This is our later morning, Saturday morning session. Later because of me. I dropped the ball. I'm a week late, and technically according to a week early. No, a week late according to my calendar. So we are going to go over the gaps, candlesticks. We're going to go over some formations, and we're going to start with questions from the group. So whatever questions you have, you can put it in the chat box. I am looking at the chat box. So otherwise, if you were going to leave me to my own devices, that is equally as dangerous. So you let me know. But we can always start with what happened over the past week, looking at SPX and apply what we have learned about check candlestick gaps. And I believe we did talk about formations as well. So this is SPX. And this is, I'm going to switch this to the daily chart. I'm going to create a daily chart. This is Thinkorswim. And what I'm going to do is I'm going to create a new time frame. So I just click D up here, go to customize list, and I'm going to add a time frame here. So add a time frame. It'll be a day one. And then I'm just going to do like 9 months and add and apply. And the reason why I'm doing that is so here it is, 9 months, 1 day. I'm just doing that so that when I'm sliding back and forth, I'm not doing 5 years worth of sliding or whatever. I'm just only doing 9 months. So I don't have to slide back as far and keep scrolling because it feels like you get carpal tunnel after a while or something.
Jamie.
Okay. Yes.
Good morning.
Good.
You possibly put I think there's a way in Thinkorswim to copy your chart so I can like have access to your chart. I've been trying to I just go on Thinkorswim just to back test, but I know that I need to set up my charts properly. Could you be able to share that in our group?
Yeah.
Thank you.
Please remind me. I think it's up here. Yeah, because I can share the workspace.
Okay, thank you.
Yep. So I'll actually I can create a workspace just for E2T and share that. So yeah, I will do that for you. No problemo. Mac, you have a question? Your
Yeah,
mic
I
is
already
open.
wrote it. I wrote it in the chat. I'm just looking for this week because the Alyssa had already said earlier in the telegroup that this week is probably going to be low volume due to Thanksgiving, which makes sense. So really, I guess the only true trading days is going to be Monday through Wednesday, and then Friday will be, I guess, a soft day. So I'm just thinking about doing a strategy for SPX on the daily using Mancini numbers. So if we did that, if we can look back at
Okay.
last Mancini numbers and say, okay, this is what Mancini is saying, because I don't really understand truly what those numbers that he's given us and how to play those numbers.
Okay, so we'll add that to the list. What's going on with Mancini and why did that set up the way it is? That's actually a good question. So we'll put that on the list. Thank you. Make sure we take care of that. All right. So let's apply, first of all, what we have been talking about so far in the chart and trade. And oh, here it is. I was looking for our meeting chat and it disappeared. So far in our chart and trade, there's a couple elements that have already happened just in this time frame since September that we can already apply. Okay. So when we talked about gaps, for example, we talked about a gap is essentially a rush of orders, is one way of looking at it, that moves in one direction or another. it basically creates a vacuum of space, which is probably the best way to look at it. I like to refer to it as trading space, but it's basically creates a vacuum that can be used as support or resistance, depending on the direction. Okay. In this case, this gapped up to SPX. This is the daily chart. This one gapped up, so it created this range space. So if we said 57.82 to 58.64, all right, that's a nice gap up right there. And because it pushed up, that means that it's a buyer's gap, because whenever price goes up, that means somebody buying. The fact that it gapped up like that, this is something to always note. Whenever there's a gap up or down, there's possibly a retest coming down the line. So in this case, and I usually mark the gaps first on my charts, just because it helps me see the formations better. It's how I do it. So when it first gapped up here, yeah, so when this first gapped up here, this is what I will call a buyer's gap. And in order to not belabor the time, I won't add all my extra text, so I ain't got to hear Janae. Originally, it gapped up here. When it came back to test, it started pushing down into this gap, which is another way of saying buyers started filling the gap, right? So that's what's happening right now. That's the retest that I was referring to. We can see that there's still buyers here because of the way we're seeing these wicks. These wicks started off as sellers, but buyers pushed it up and took over these. So there's plenty of buying happening right now. It wouldn't surprise me if it comes back down and it does the exact same thing, because there's a lot of buyers that's sitting in there. But if you look at what happened up here, also a gap, but it gapped down, right? So at the time when this one gapped down, same thing, creating its vacuum, creating its space. So at the time it was looking like this before the rest of the candles came in, and eventually started pushing up. And then on this day went right through there, and that's when we delete our gap. So this is what we have going on right now. And this, of course, is making its way up to the high. So in this case, I'll be looking at this to say, we got this gap. I will mainly be looking at what's going to happen once it comes back down here, especially if I'm looking at that on the daily. What's going to happen when this drops back down? Okay. But anytime you see a gap, we're waiting to see when the gap is going to fill down the road. Sometimes it can be right away, which is in this case, right? This gap down 11:15, but technically it got filled over here 11:21. It was started filling that gap right then. Sometimes it takes a little bit longer, right? Sometimes you'll have I don't want to use the word tricky situation, but this one gapped down. The sellers push this down, the rush of orders. Sometimes that can be overnight where that's happening. That can be an event. A mixture of things. I believe this was the election. So this was a seller's gap. But depending on who's looking at the chart, they may feel like this gap got filled because of this gap. Right? They're like, well, this rush of orders came down from the sellers, came over here, and another rush of buyer orders, blew past that. Depends on how you look at it. I like to think of it as, it could be either way. I'm just more concerned about what's happening as it fills down the line, but I can understand their logic on that. So at any given time, we can see that there's some type of gap that's happening. The gaps are not always going to be this clear. Okay. They won't always be this clear. Some of the gaps are going to be, we got to look at gaps also from open of one candle I'm sorry, from the close of one candle to the open of another candle. All right, that causes a gap as well, depending on, of course, where you are in the chart. But close to open would be the close here on this candle is 59.17, which will be the top of this candle. Close up here will be 59.17. The open over here is 59.40. So 59.17 to 59.40. That is the gap itself. So this would have been charted right here. You were charting the gap, you would chart it right here. But let's say the night before, something like that. If you were charting or the day after or the morning of, depends on you got into the chart. But this, went right through there. And so it filled it. You'll see a lot of these type of things happening. If you look at like the overnight, if you do overnight when people like SPX as well, or like what is it, /ES, the futures trading, you'll be able to see prices moving overnight. So you may see some of those types of gaps that are happening. That's what happens when I think it's referred to as Globex. Forgive me if I'm using the wrong phrase, but I thought it was called Globex. So like sometimes, 7 o'clock in the morning, maybe, people to look at what's happening on for the futures and the SPX as well, I believe, to see what changes have been made overnight. And you'll be able to see different kind of gaps as well that'll look, pretty similar to this. In between candles, there's a gap up. And that needs to be accounted for as well. But the ones we're used to are the ones that we can see clearly, but the ones in between are ones we should be aware of as well. This is another example. This closed up here at 56.48, but then when it opened at 56.23, right? 56.48, 56.23, that's $23. 25, what, $25? Something like that. It's early in the morning. Sorry, y'all. So yeah, these gaps that we're looking at, they're all, some of them are obvious, and some of them are kind of like, I don't want to say hiding, but they can be hiding in there. All right. So our candles, of course, represent our price action for the day, or whatever time frame you have used. The ones on the right side tell you what the time frame of the candle is. All right. Any questions on that? Any questions on the candlesticks? Any?
So Jamie, so right here, let me see, where all these candles are, the more they come down, that smaller that gap is going to get, right? Until it's
Yep.
closed all the way down here.
Yep.
Okay.
Yep. The more they push into there, yep. Exactly. And to be honest with you, I've always seen it like this is always, I don't want to say always, but I started figuring out the force at which it bounces off the gaps seems to be a signal sometimes on what could happen on that next, it's been 3 times it's come by that before. Yeah, 3 main times it's been down there. I'm thinking that next time with the amount of buyers here on this candle, I'm like, it's SPX, but I don't think it's gonna just blow right through there. So it'll continue to eat into that. So yeah, then we got another buyer zone down here.
I see now how you say a gap can act as support or resistance.
Mm-hmm.
I just don't. I guess when I learn the patterns, like the morning star and the different patterns, I'll know, how do you know when it's gonna go through, or how do you know when or it's gonna push up, because like here, where you at right here, where it bounced off 1, 2, 3, and this one, would this one be a hammer, or because it's the top and the long wick? Let me.
Yeah, are you annotating?
Yeah, I got to get the pencil. I had the eraser.
Oh, okay.
I'm looking at these right here, right? And I
Okay.
see how it bounced off, bounced off, bounced off. And I'm thinking like this one, because it has that big part at the top and then they got the long wick, would that be a hammer? Or and then how
Ooh.
would you know when it's gonna really go through? Like it could do that 6 or 7 times. So I guess the knowing the candle pattern will let you know when it's gonna actually push through. I'm not sure.
If you mean by push through, you mean push through the gap.
Yeah, come all the way
Um,
down and then close that gap altogether.
Okay, so I wouldn't say that there's a way to know when it will push through,
Mhm.
but I will say what I'm usually looking for is once I know that it's getting close, now I usually just watch price action and momentum.
Okay.
All right, so I'll give you an example. Now I have to be honest, but I do need to say this. When it comes to these gaps, different people trade the gaps different ways. Okay.
Ah,
And so what I mean is there are some people who see this gap and they go, okay, 58.52 is the top of this gap, and 57.80, let's say 57.82. So let's say 57.83, 58.51. All right. So I did that wrong, didn't I? 57.83. Was that right? 57,
yeah. That was
57.81, 58.52. 57.81. We'll just say 58.52. Is that right? Okay. So they're going to see this and say, we got 70 something dollars worth of 70 something dollars worth of money that we could be making right here. Right. So they're looking at it like, well, since this was a gap up, right, that means that this is a buyer's gap. So they know that buyers are going to be sitting here. So some people will go, I'll just short it on its way down. I'm not going to get into the details of shorting, but I'm saying in our vernacular, somebody might say, well, I might try to do call credit spreads. Either way, they might want to take advantage of price as it's moving down because they know that it's going to want to fill the gap. So that person might be looking to see when this price comes back down here. Am I looking at momentum? Am I looking at, let's say, the moving averages? They might be looking at the moving averages. Not delete, we want to load. Okay, so right now, these are the moving averages. Just know that the moving averages are providing support right now because they're underpriced. Okay, if these moving averages were above price, and that would make us think that this is going to start moving down if they're above price. So that would give somebody who's looking to trade the gap a little insight to say this might start pushing down into this gap area. And that's what they will be trying to trade. They're trying to trade the amount of time it takes from the top of this gap to the bottom of this gap. In this example, that's what they want to trade because they want to be able to make money. They know where the gap starts. They know where the gap ends. Of course, the caveat there is price might bounce off because there are buyers sitting in there. So they're, kind of playing the long game, if you will, because they know, this is probably going to get filled at some point, and they'll have the patience to wait. That's how some people do it. I kind of prefer to look at the gap as, like I said, extra cushion of support or resistance. In this case, I'm looking at it like, okay, if price comes back down here, I'm gonna be watching. I'm expecting buyers to push this up. So I'm sitting in here waiting to do a put credit spread because I think that the buyers are gonna, push the price up. So put credit spread means I want to take advantage of the price going up. So I'm looking at it, it's more so in this case, I'm looking at it in more so from an anticipation standpoint. The formations themselves that you might be referencing, I'm not as I'm not looking at that from that standpoint when I have a gap involved like this. But the type of formation that you're talking about, if I'm setting zones like this would be the typical way we would do like a formation, right? Normally it's 3 candles and there's a leg in, what's called a basing candle. This one has 2, and then a leg out. So this is the formation. This is a closer formation to the kind of one that you're referencing, where we might see something. Anytime we're talking about like a hammer candle, any of the ones that you mentioned, the morning star, the evening star, anytime we're talking about these type of candles, bullish engulfing, bearish engulfing, okay, the one thing that's important, here's the hammer. The main thing that's important about any of these formations is understanding that these are effective depending on where you're seeing them on the chart. And what I mean by that is, let's use bearish engulfing. So in this bearish engulfing, we're seeing that this first candle will be the smaller candle. The second one will be the larger candle. The first one can be considered an up day. The second one could be considered a down day. But the important thing is that the second one is engulfing the full body of the first one, okay? This is gonna work, but it's gonna be strongest if this formation is happening in a seller zone. In other words, when it's happening up here, like in this type of a situation, for example, I would see this as bearish engulfing because the body of this candle is engulfed by this one. All right. Now, the only thing here is that somebody could very well argue that this, wasn't considered an up day. But in terms of the way it looks, engulfing candle, it is engulfing the second candle is engulfing the body of the candle. But this area I'm looking at is a seller. This is
I'm sorry,
happening.
Jamie, can I ask you,
Yep.
can I ask you a question about that? Wait, go back.
Yep.
When you said that you consider this engulfing candle, it
Yep.
doesn't have to take out the wick as well? I thought it had to do the body and the wick. It's not.
So let me tell you about that.
I thought that was a doji.
I have gotten mixed, first of all, great question. Secondly, I have literally gotten mixed answers on that. Now, my initial understanding was that candle had to be what you just described. Okay. I thought that it had to be that, what you described. And then on more than one occasion, I have been told that it's the body of the candle, as long as the body of it is engulfed. Here's the thing. I've seen the reaction in both times, whether it's just the body or whether it's the entire candle. In the seller zone, I would say 8 out of 10 times that formation, and maybe 7, I'll say 7 out of 10 times, I've seen that formation, and I'm usually waiting to see it drop. So far, the only thing that seemed to be consistent for me is the body being in there. That's part of the whole thing. Personally, when I see the formation, I always check to see if it's the body. This one is the full body just to be on the safe side. But I've seen it on the chart happen both ways. And I've heard that, it should be the body was the most important. As a matter of fact, for the other formation that's on the opposite side of that. Which one is it? I think it's I thought it was them. Bullish engulfing. Same thing. I've seen where this is engulfing the body. This candle is engulfing the body of this one, but not including the wick. And I've seen that the same way. This body is engulfing the body of that one, not including the wick on this one. And I believe this will be considered an engulfing candle. So, and yeah, I'm sorry. So on my chart, yellow is the up candle, white is the down candle. I'm gonna help y'all out. I'll switch these up for y'all. But I will say this. I'm gonna switch these to make sure y'all straight for while we are here. But I will definitely say to try to make it a goal. Same color. Try to make it a goal to be able to see the candles and know what's happening without knowing even if all of these candles were green or all these candles were red, would you still be able to tell what's happening on this chart effectively? That should be the goal. Regardless of candle color, can you tell what happened? Right? And to be honest with you, the easiest part of that would be once you highlight this and it tells you the information up here, you'll be able to tell whether or not that's an up candle or a down candle. Just by looking at where it opened and where it closed. That will always tell you. I'm working on a video right now. Sidebar. I'm working on a video right now. Because I started learning candles the same way as most people. And see if I can. Nope, I can't. The way I wish I would have learned candles would have been using this bar, using the bar version as an example. Right? This information is the exact same information we just looked at in a different form. Right? But what I'm just trying to highlight here is, so the way this is a bar candle, and the way this works is literally you got the same open, high, low, close. This is like the skeleton key version of the other candle we were just looking at. That's the best way to describe it. That's probably why I like it. It's like the skeleton key version of that. On the left side is going to tell you where price opened. On the right side is going to tell you where price closed. Right? You got your high and you got your low. Left side is the open. Right side is the close. All you need to know is, did it close higher or low? Did the right side close higher or lower than the left side? That tells you the direction. Right? This one closed above it. It closed above. So we all know that that's bullish, right? This one will be bullish because this was the open and this was the close. So that's going to be bullish. This one is bearish because this opened here and closed down here. So that's going to be bearish. Same with this guy. That's going to be bearish, right? Now we're saying that with the colors being the same colors, but if we switch all of these colors to all red, this would still be a doji. This would still be the same doji that we just looked at a second ago, but slightly up, slightly bullish. just because it closed slightly above the open. Right? So this is, we use line charts to do some clarification when we're not sure about something. But when we have like a doji, you know, a line chart is not going to tell you something like this. These two are close together. You know, this style of candle, when it gets close like this, right? Because somebody even said it, this is the doji. I wasn't able to tell this, you know, I just at a quick glance, I wasn't able to tell whether or not this doji was mostly bearish or mostly bullish, but I could have on this bar. Technically you could just, you know, just highlight it, but I like being able to look at the candles and keep it moving. Right. So in this case, it was actually a little bit bullish. It just didn't show up here because it wasn't enough space. But I like to look at these candles as well. And these are very good candles for charting trend lines because it makes it look a little bit more precise. So I definitely would encourage to look at those bars, these bar candles. But all it does is just basically, you know, removes the body and just leaves just the skeleton. So anyway, since all that information is the same and we're all good in terms of the gap, did the gap questions get answered before I move on? Are we all good on the gap? The amount of time it takes to fill it, how it can be used as support and or resistance.
Yes.
Anything else? Did we miss it? Did we answer it? Did we? Are y'all all good? Okay. Let's do
Actually, I was gonna say, I think SPX gap down yesterday in one of the 5 minutes candle. I mean, 5 minute time frames. And I think it was earlier in the day, like maybe around 10ish. I gotta,
Janae, why was you looking at the 5-minute chart that early?
I look at the 5 minute chart all the time.
That early in the morning?
Yeah,
It's
I do.
a gapping that's gonna be happening
Uh,
early in
okay, well, but yeah, I keep it on. Keep it on that.
okay.
Hold on. When did it start? Actually, I can't see it on yours. I gotta look at mine.
You sure it was a 5?
Yeah, because I keep it on 5.
I'm just checking.
Mhm.
She said it.
What was yesterday, 22nd?
Yes.
I feel like, oh, that was kind of convoluted. I do feel like it, yeah, and it just threw me off. I was like, yo, for real?
I don't mess around with the 5 until entry times.
Well, I'm always looking for entry.
Right.
So, what's the old cliche? If you stay ready, you don't gotta get ready. Dang, I really, I gotta look for it. Maybe it was yesterday or the
Right.
day. I'll do that.
Janae, the question is, looks like Mr. Mack. How did you choose that 5970 number for SPX yesterday? And what time did you place the trade?
Inquiring minds want to know. So yesterday I got in at 3:21. So I
Oh,
got in late.
That's considered
But
late?
well, yeah, to some degree. Only so, and there's a different, I will say that I do appreciate the disclaimer. I mean, there's so many different ways to trade. So, I wanted to kind of do another trade. I only did two. I kind of wanted to do three for the week. And so those are some other things that kind of catapulted me to trade. The day before, I did want to trade and I couldn't because my trade station really froze up on me. So I would have traded more so on a Thursday than a Friday. So I just got to put that disclaimer out there. And I was considering even a day trade, meaning a 1 DTE. That didn't happen. I bring that up to say Thursday, I was like, ooh, 6,000-ish. Yeah. Because of that didn't happen, I was more so on the call side or the upside. So that's a part of leading into the 590, 5970. There was no premiums there
Yeah.
by this time. And so I'm like, and so all of that. But I do look at Mancini.
Okay.
I do look at Mancini, and I actually did look at the peak bot, and I looked at it, and I'm saying to myself, and I'm looking at Nvidia, and I'm like, Nvidia hasn't moved. Nvidia hasn't moved. Will Nvidia move after 3 o'clock? It hasn't moved. It's literally based below. And I said, if it goes up, it'll like cheese. Then I look at the other Mag 7 because Apple is the other bigger one. So Apple and Microsoft, I look at those, see where they are, and I'm like, they look fairly okay, like they could move up or whatever. I'm like, darn it. So it could move up. I would say this because I do have to put this out there. I started out as a call girl. So I am if you get up and you brush your teeth first thing in the morning, you always do it. And so my
Dude.
propensity is gonna always be to do a call. And the only reason I say that is because I
Oh
would
my goodness.
advise to do a put on this. But again, I'm used to doing the call. Anyway, so
Kyle said I was a
partly,
call girl.
yeah, partly was to
I was
get in.
thinking the same thing.
I
That
know.
is hilarious.
Partly was to do 59.75. And I did try to execute that, but there was nothing. It wasn't picking up. It wasn't picking up. So when I did the 59.70, I really did have to say to myself, that feels close. That feels close. Now, here's the only other thing with that. I look at the IV. I'm back out the IV from what the current amount is of the wherever the number is, and say, okay, and I think the IV was 12 at the time. So what that meant was 72. And I'm like, ooh, that's could it go down? So yesterday was a little bit I would have done 59.75 if I could have. Okay, I really did try to execute that. So that's and I just have to go back to that. 59.70 was the next, and that's the one I did. But I look at the IV to back into it, up or down, see where I'm going. Of course, the down clearly would have been okay. The up was it was only 30 cents. It was only, so I only did two contracts. So it was only $60. And sometimes you just have to say, oh. Now I will say this. It did breach if you watched. It did go up.
Sure did.
It went up to 2. I think it went up to 72-ish. Again, that's IV number. That's exactly what the IV number said. Because when I got in, if the IV is at 12, take the current amount, add 12 minus 12. It legit was legit. IV is your friend. So And then I look back at
'Cause I closed
Nvidia.
it.
Nvidia didn't really move. So I'm like, okay, it could come back down. And it eventually did. The other part to that is you gotta know when to hold, you gotta know yourself to say, okay, can I hold this? So that's the other, you gotta know your own risk management. So I've executed, and I'll end with this. I've executed a week ago where I had a stop in. And I'm mad that I had to stop in because it finally picked up when I was trying to get out. It's crazy how some of our stop losses pick up when you don't want them to, and when they do, and when they don't, anyway. So that was the only reason I said, if I put this stop, I feel like it's going to get me out. And I was like, no, because it's going to come back down. So there was some other convictions up in there playing with that at the same time, to fizzle out.
I have a
Where,
question.
yeah, for me or
Did
for,
you, yes, did you do, 1 DTE, or you did a day trade and
that was
just
a
a
day.
call? Oh, a day trade, and you did, um, just a straight call,
No, it's a
not
vertical.
oh, you did a vertical. Oh, okay, okay.
Yeah, I did a CCS.
Oh, okay, okay.
Yeah, nah.
Yeah, the one that I did was 59.70, 59.75. Same thing about the premiums. And I closed mine when it started getting close to breaching because um it literally was like creeping up. And I was like, as soon as I saw it get to like 69, I'm like, I don't like the way this feels. So I was like, I'm gonna go ahead and close this so that I don't get any more so I don't age myself by 2 years waiting to, but I knew it was gonna happen. As soon as I closed it, it started pushing down. I was like, this thing is gonna stay under this thing is gonna stay under 59
Right.
cents.
So see, that's all I'm trying to say. I'm glad you echoed that also.
Yeah.
And so I only say that to the people listening that, like, you know,
See, this is why, but what we're describing is why I broke up with SPX in the first place. Because everything at the time when I got into that trade, everything was pointed at this trade being bearish. Like it should have been the moving averages, the whole nine. Everything was pointed either to it was being bearish or it was already pretty much out of the money. So so I was like, oh, okay, we should be if not bearish, if it was pushing up, definitely out of the money. Because I remember going, okay, this is a trade that makes sense for the time frame that I have left in. So it must have been closer to 85, 88% out the money, something like that. So I thought, okay, we should be good. This should be okay. I was above the implied volatility that she was referring to, which is current price plus or minus this number, but in this case it was CS, so that was all good. So I was like, we should be, Now again, I could have left it. If I would have left it, I would have been breached by almost $3. But because of the way it was pushing up with such force, it also looked like it was just going to go right through there. So, which would have been, at the time of day I was getting in, that's the problem when you get in. I was getting in like all the way at the end. I like to get in all the way at the end of the trading day, but that also means that you don't have time to maneuver if you get in the last 15 minutes, depending on what's happening. So with the way this force was coming through there was no reason for me to think that this was gonna retreat like it did. That's why I was drawing the lines across here, because I was like, did I miss something in terms of psychological numbers or something like that? Was this a level that I could have seen that would not automatically, but get the idea that this was gonna retreat. On the, because I spend most of my time on the 15-minute. Janae's 5, I'm usually on the 15. But thank you for sharing that though, Janae, because that was
The
it's
only other thing I will
interesting.
say is my screen shows ES, NVIDIA, and SPX. NVIDIA
Yes.
didn't go up. And so that was my only other reassurance for feeling I could stick it out. If NVIDIA would have pushed up beyond 141, then I'm just but that was the only other level of comfort to say, we could ride this out.
All right.
Hope that helps. It's a little bit of all of the things. I don't use moving averages, but IV is your friend. I use Mancini and the Peakbot to give me a range of comfort, because I think Peakbot at the time was saying at one point it was saying 6,000, which is kind of what I wanted to do the day before. And then I think it went down to like 59.85. So 59.70, of course, is a little bit below then, but that's how I played it. But I'm always looking at NVIDIA. If NVIDIA was going to push up, then that would have been catastrophic.
Yeah, I probably saved a couple gray hairs from me by getting out, so I was okay with that. But
So
I
I'm
was kind of like a little miffed that it went by half, but somebody's talking. I hear a voice.
oh, I had a question. So Janae, did it expire worthless or you bought your way out?
No, it expired worthless. It came down.
Oh, okay. Oh, okay.
Yeah, I bought my way out. Get that crap. I basically did PDT hack, locked in the loss, and I did it.
Oh, you did a
But,
PDT hack.
I mean, that's how I locked in the loss, yeah.
I didn't think PDT hacks lock in losses. I thought it only locked in wins.
No, ma'am. If you're losing on the trade, let's say, and yeah, if you're losing on the trade, you can lock in that loss on doing the exact same thing that you would normally do anyway, by so you're still going on the opposite side and doing the opposite legs. But what's changing is the amount of money. And what I did was just went in and just let it, what it gave me is what I accepted, and got out of there as soon as I could, instead of fighting with it. So you can lock in a loss. And the reason I did it was because by doing it that way, I also free up my collateral right away too, because it's still a PDT hack, which frees up your collateral. Yes, ma'am. You sure can. Do it all the time, actually. Whenever I see something that's like, nah, I'm gonna go ahead and get up out of here. PDT hack to the rescue.
So you already did the other side.
But on cash settle, I'm still only talking about cash settle indexes, y'all. I don't do that
Right.
PDT
But you
on
already
regular
so
stock.
you already did the other side.
Yeah.
Oh, okay. I didn't know that.
Mhm.
See, I only do one
Oh,
side.
wait a minute. Yeah, you have to do it on this. So if one side is already in, yeah, then
Okay,
you
so
got
that's
it.
what I'm saying. I didn't. Okay, yeah. I only did a call credit spread. I didn't do a PDT hack. So
Right. I'm saying I did a call credit spread, but in order to get out, I just did a PDT hack to lock in the loss. Because in that situation, you can either do a visual. In this situation, let's say if I'm right here, just picking a spot randomly. So let's say if this is 6,000, that's a good enough number. So let's say we're doing 6,000 and 6,005, right? So we have these two. Okay. And we'll do confirm and send just to have something on the chart. Whoops, I thought I did it. Either way. So 6,000, 6,010, that's fine. On this side, then when I come over here, since this was the sell leg, I got to buy over here and then sell over here on the opposite leg. It's still going to come up here as a credit, you know, so I'm still doing a vertical. But since I'm doing it on the same legs, if it accepts, that's going to, you know, once it fills, that trade is basically going to expire worthless and it's going to free up my collateral. In my case, what I do is I get in on the one side, you know, with the intent to do an iron condor. That's usually what I'm doing during the power hour, is I prefer to do it that way, get in on both sides with just a regular iron condor, because again, I'm sharing the collateral. But if I need to get out of this trade because it's getting close, I can just do a PDT hack. And is accepted at the $9 or whatever it is, and then confirm, it fills, releases my collateral. And so so basically the PDT hack can be used to, you know, as a tool to, you know, make profit, but it can also be used to defend. And, you know, because my other option in that situation is to go here to close it, right? I can come over here and close it, but I might end up having to pay more money to get out of it by closing the vertical, if that makes sense. So I always try to weigh, okay, which one of these is going to be cheaper for me to get out of the trade? So cheaper and quicker, I guess you could say, to get out of the trade. So usually I feel like, let me just lock it to make sure my emotions is in check, but I know that I can always close it over here on this side as well. So it's, you know, so that's how I kind of approach that.
So you always take what they give you on the PTT hack?
I wouldn't say always, but it depends on what's happening and how quickly I'm trying to get out.
Okay, so
Right.
so what's the math on it? Say like, you know, you do a PDT hack early in the morning on that first candle and say you take in $100 and it quickly goes in the opposite of what you were trying to do. Do you have to figure out the math, or is there a way to figure out the math to lock in a loss?
Well, this is how I
think I'm getting mixed up with when we talk about taking like 2 times what you take in or 3 times what you take in. Or
Yep.
is that the math?
So, and by the way, let me pause here. Number one, thank y'all for the questions. They are good questions. Number two, if anybody is unfamiliar with what we're referencing, please don't get overwhelmed by this information. Please don't feel like that you got to memorize and learn all of this stuff all at once, because these are all tools that we eventually assemble together, you know, to kind of create our trading plan. So as we're walking through here, please don't feel like, oh, that's something else I got to add, or because that's how I felt for probably like the first 2 years. Every time I would hear something, it would be like, dang, I got to add that too. So I wish somebody would have said at the time, you know, hey, just know that it's a tool that you may not be using right now, but it may be one, you know, that you will use going down the line. Just, I want to make sure I say that part. When it comes to the math, okay, and what made me say that is when it comes to all of this stuff, but especially like things like the math, there's multiple ways that we can get out of a trade and multiple ways we can calculate how the math is. So we know, for example, if we do a 5 spread and we do one contract, that's going to be $500 of collateral, right? So let's say 500 of collateral. Let's say we get lucky and they give us $1 credit. then we know that's going to be $4 of risk, right? That's what we got left is, I probably should be doing both the numbers of the same type. $5 collateral, which is $500, $1 credit, right? So that's gonna give us $400 of risk. That $400 of risk is gonna be important because this is side one, right? So we got accepted, we're in, side one is good. Okay, the good news is if nothing happens and everything is cool, we end up with $100, fantastic. But what if it don't? So now we got this risk that we got to deal with. And then we trying to get a credit on the other side. Okay, so let's say this other side, we're gonna get, and when I say other side, here's where we're talking about what's happening. On the other side can be an iron condor, which means you're using the same collateral, right? So let's say if it's an iron condor, you get 50 cents on that iron condor. We're going to try to keep these close together, right? So you're going to get the same credit, which means we still using the same $500, right? I'm going somewhere with this. So we're still going to use the same $500. Now we're receiving another $50 because it's an iron condor. So our risk now is $350. Okay? Because the iron condor gave us money on both sides, and giving us money lowered the amount that we had to risk overall. Okay? So the good news about being in this iron condor, obviously, we get $150 if everything goes right. Okay? But the thing is, in this situation, we have to close these separately or let them both expire worthless. But if anybody's risking getting breached or whatever, we got to close that separately. And then that's when we start talking about 60% take profit or whatever the mechanism is. How much do you want to take out? When is the right time to close? That kind of thing. Once we, because you can close these separately, and there needs to be an end if you're not going to let it expire worthless. Because these are, it is an iron condor from the standpoint that it's sharing collateral. But what makes it a little bit different with the PDT hack, though, let's say if we're doing the same thing here, right? Let's say we got the same information, but we're going to do the PDT hack. Okay? The PDT hack in this situation is going to say, okay, we got the $5 collateral. You got side one. Side one gave you $1. You got $4 of risk. Okay. Based on the risk of side one, the side one risk, what you're going to do, it was $4. This right here, $4. What profit do you want? Right? So in my case, I've been experimenting with the number, trying to figure out what's a good enough number. And the reason why I had to experiment was because I found out that it cost me $17 to do the PDT hack trade. It cost me $17 in fees with Tasty Trade. It used to cost me $70 for that same trade when I was with TradeStation, and that's why I left. So logically, for me, if I'm truly talking about making a profit, I gotta account for the fees. So I look at it as, what's my take-home pay for this trade? Right? The difference between gross pay and net pay, I'm looking at it from that standpoint. So when I come up with my number, let's say for the longest time, I think my number was 35 until I found out that I was getting $17 of fees. So that number, of course, is $18, something like that. So I'm like, well, I want $40 as my quote take home pay for that, right? If I want to take home $40, but it's $17 in fees, that means I gotta put that at $60. So do y'all see how I got that number? This is my take home. This is my take profit, if you will,
Yes.
right? So in that box, I am typing in $4.60 limit. So this is where I'm deciding to take the profit at. I could change that number. The number that seems to be working the most consistently lately is 50, even though I don't like it. And please understand, the way you come to the conclusion on what you want to take profit is different for everybody, but mine is kind of based on you using the easiest, simplest numbers to be able to scale. So I look at it like if it's 460, right? And I already know that my take home is going to be $40 on one contract. So if I'm doing 5 contracts, I know that that's going to be, 200, right? Or whatever it is. My math is off. It's too early in the morning. Early in the morning. Is that right? $40 times 5 contracts? Yeah, that's 200. So I know that it's easier for me to scale doing it like this if I'm including my fees in it. But when I have it at 460, it takes longer for it to fill. Even though it's only $10 difference, it takes longer for it to fill. Sometimes and I can even say when it's 455, it may not feel like till the next day, depending on what's happening, which is fine. I'm not complaining about it, but I'm just, making it aware that the other side may not feel right away. And it's okay if it doesn't. What I usually find is at the end of the day, it'll be close to my number, whatever the mark is. The mark might be like 4.25 at the end of the day, and then the next morning it'll trigger. Sometimes it'll be 3.95, and then the next morning session opens, it triggers. Okay, but so by doing this here, this is how I'm, let's say locking in on the profit side. All right, because I want to make sure that the profit side is okay. For the PDT hack, right? So we locking in profit. Okay. Lock in the profit side too. All right. So lost though. What I usually end up doing is I know what my risk is, right? I know what my risk is on this side. So I'm paying attention to that. What was my risk when I got into this trade? My risk was, let's see if my risk was $4. Right? This is the $4 risk. And now I'm starting to notice that I'm about to be breached. Okay. So now, usually my normal panic mode my normal mode is like, oh man, I should be panicking. As long as I know what my risk is from trade 1, that's how I'm gauging where I want to lock in this loss as it gets closer, right? In other words, so what happens, because when you're doing your risk, you're looking at, okay, I got $1 over here. This is what they gave me. This is the risk that was left over. And now I just need to check out you know, what the difference between the two is gonna be. Because at the end of the day, that's what we're looking at, the difference between the two. How much did I receive on the first one? I received $1 credit. All right, what was my risk on the first one? $4. If the credit that I receive, I believe it's if the credit I receive on this side, if it's $3.95, let's say. Credit I received on this side is $3.95. And I gotta ask Carlissa about that now that I'm thinking about it. Because I usually accept that number, but I forgot that the one I did yesterday, I did it on 2 contracts. So I probably need to be aware of that. What my number was with those two. I'm gonna have to ask Carlissa about that. Who asked about that? Who was the one that asked about that? PDT locking in the loss.
That was me,
Okay, who's me? I'm sorry.
Valerie, sorry.
Okay, Valerie, please make sure you inbox me because I'm thinking about yesterday's trade and I'm seeing the numbers, but I forgot that I did 2 contracts. The mechanics will be the same though. Matter of fact, yeah. The mechanics will be the same. Give me 1 second. Somebody asked, is anybody trading in their IRA?
My IRA account is with TradeStation and they gave me a IRA cash account so I can buy options and like, calls and puts. I cannot trade credit spreads in that account.
Is that right?
Yeah, that's what they told me.
That
Unless
might be
somebody-
more favorable because, well, let me say this, and here's the strategy. On days when it goes down, but are you on days on days when the market is down, then you kind of know the direction of the market. I guess the only caveat would be, can you do a day trade? Can you get out the same day without being penalized?
I can. The only thing is that it's something about what. So say I get out with a profit, that money's
Mhm.
not freed up to me, freed up until the next following day. I have to wait till the money settles.
Okay, that's fine. Are you able to trade SPX or just a regular ticker?
That's a good question. I haven't
Have you
done
have you
SPX
traded?
because SPX, those would be calls and puts to buy. That's my understanding. So I've never tried SPX in that account. Just
So you
regular
trade,
other.
okay. And so say, I don't know, Palantir, Nvidia went up or down. You're able to trade within the day and you can get out. Are you still subject to the 3 PD? Are you still subject to the 3 pattern day trade situation?
No, because it's a cash account.
So
But
the
your
IRA,
money's not settled, so it's like you need to have a good amount of capital in there if you want to be going in and out of trades.
okay, so that's not bad.
Yeah.
Okay, but then here's the other part. The money, if you profit, the profit just stays there. You can't necessarily take that profit and put it into your like particular bank account. You just got to leave it there because it's an IRA, right?
This is an IRA. So my understanding is if you're going to make a withdrawal, it has to go back to another IRA vehicle. Probably, and it's a traditional IRA, so another traditional IRA.
Got it. So so the money has to stay.
You could take it out, but you would have to pay taxes on
Penalty.
it. And
Right.
there would be a penalty.
Right.
Yeah.
I was gonna say heavily.
Yes. Yes.
Yeah.
So in essence, you're using this IRA to build up for further retirement. That's how you're using this instrument.
Yes, yes. I wanted to see if I can do better than just putting them in mutual funds.
Awesome.
Got it.
Thank you for that question, because that is a great question.
You're
And
welcome.
I'll be honest with you, until I started trading, I didn't even know that that was a thing that could be done.
Yeah, I'm just now learning more about that. So I'm curious about doing that. But if the money has to stay in the vehicle, I don't know if that's what I was hoping for.
Well, I'll say it this way. There's a whole lot that can be done with those IRA accounts that I didn't even, people got businesses that they have set up. Based on, let's say money that they were able to borrow from the IRA account, but the profits have to go back. There's like all these stipulations that go along with it. But the one thing that I guess you could say, gathered from the way it's done as its own income stream. So whatever they're doing for the IRA, they're doing it to build up money in that, but that's not they're also doing whatever else they're gonna do to make money. So it's a separate income stream that goes directly just to the IRA for that benefit. If that makes sense. So yeah, I'm glad. Thank y'all for that question, because that is a great question. So in terms of the PDT hack and locking in the loss we were talking about earlier, so whatever you receive as your credit, okay, whatever you receive as your credit in the trade, that amount gets subtracted to the number that you're locking in the loss for. And that's how you'll know what the loss amount is. So let's say on the side one you received $100, and then side two you're getting ready to lock it in and it's $395. You subtract this so 395 from 100 is 295. So this is the amount that you're locking in the loss for, 295. Does that make sense?
Yes.
Okay. Locked in amount minus original credit, I get you say. It's $1. 295 is total loss in this example. So I don't know what mechanism will work for y'all. I'm trying to figure out a mechanism myself to be able to determine which one of these is the cheapest way to close the trade. Whether it's the PDT hack version. Obviously I always prefer to let stuff expire worthless. That's always my number one version. I'm putting these dashes here so I can separate won't look like we were just talking about Kava for that. But whatever one of these, there's always a cheaper version. It just depends on what the version is. But once you're on side one, you can share your collateral by going here, by doing the iron condor. And to be fair, understand that a PDT hack is also an iron condor. All an iron condor is essentially just saying that you're doing a trade on both sides, call and put on the same expiration. Right? That's what makes it an iron condor, is that it's happening on call and put. Price can only be in one place at a time at close. So that's what makes it an iron condor. Okay. The only thing that changes is whether or not the one side is above price or below price or using the same strikes. But they're both iron condors, just used in a slightly different way. Okay. We're gonna hit Kava. Let me we'll hit the futures so we can talk about Mancini, and then we'll hit Kava, and then we are here. So
Jamie,
let me, yeah.
I have a question on futures. So when you're
Yes.
looking at futures overnight and the numbers are different, is there, and I guess that's what the numbers comes up in the morning. The future
Yes.
still has a number standing all on its own from SPX. You could say that you can just look at the direction of futures as either up or down to see what the market is going to do. But futures numbers is always just on its own versus SPX. There's no way like you wouldn't take like, you know how you could sometimes do SPX
Take
and
the
then
difference.
convert it to SPY to
Take
figure
the
out where it
difference,
is.
Valerie.
Oh, you just take the difference? Thank you.
It's the current
Let her
difference
finish the
of.
question, Janae. Let her finish the
Oh,
question.
my bad.
Jesus, you and our listeners will run through somebody's question. Like, let her finish. Well, please finish your question.
When I look at futures and I'm looking at it as you just looking for the direction. Is that correct? Or the
Yes.
number should be somehow similar to what SPX should do?
You're correct that you're looking. Actually, let Janae say what she gonna say now, so I don't interrupt her. Go ahead, Janae. You're gonna say.
As she said it, you got it.
Okay.
Thank
Yeah,
you.
that's what it is. So at any given time, whatever the current ES is, you have to like, so in the morning when we get the numbers, they do the conversion and we appreciate that. But you still want to verify if by the time you get in at 3 o'clock, is the variance the same. So you always got to double check the current price of ES minus SPX. That's the difference because they will change. The market didn't stop because you chose not to look at it. So you always got to do the math to understand what the difference is. And then when Mancini gives his numbers, he's strictly ES. So you always got to back out what the difference is for SPX at that time to understand
Got it. Thank you.
where SPX
So,
could go. I
yes.
will listen
And
more.
and thank you for that, Janae. And you may be able to answer this question. So, well, I guess today is Saturday. I thought that ES is also moving. It doesn't move on. Isn't it supposed to move after market on Friday still? Or no? Like I thought the ES would still be moving when we close in New York. This like ended at like 4:45. Is that right? And picks up what on Sunday morning, maybe? I'm asking Janae this question.
That's funny because when the market closes at 4 o'clock, I ain't looking at nothing else. I'm done for the day. I
So
ain't
you don't
looking at
have an answer
ES
for
and
my
I ain't
question.
looking at SPX.
All right.
So I don't look. I really don't pay attention.
Okay. So here's just everything everybody said is on point. The only thing that I would clarify is the way I learned about the futures, just general the ES, the way I learned about them was, or shall I say the way it was described to me, was if you think about the futures as the stock market doesn't close. Let's say generally speaking, the stock market really technically doesn't close. Except for let's say certain parts of the weekend. So if you think of the stock market as running 24 hours, if you were to put it in that concept, if the market is running 24 hours, but New York is only accessing it mainly during our time frame, right? Then it rotates to whoever's next. I think it goes from like London has it before us, then it's us, then I think China might get it next, let's say. So the majority of the time that we're open, we're going to have our activity, but the futures, if you think about the futures, is still running 24/7. SPX then, the S&P 500, we're able to see on SPX what our chunk of that time frame is, our chunk of that 24-hour running market is. And so the difference between the two, what's going on 24 hours and then what's going on, what may have happened when it's our time to get in, that's what we're reconciling in those numbers. So like Janae was saying, so the numbers that Mancini is giving us, for example, so these are the numbers that we're converting. All right. I'll just move this up. So he's telling us ES, and he's saying 6009 had to reclaim, right? So 6009 is what it was on the ES would be, which would be up here for that time frame. 6009. This is ES. So it would have been like up here somewhere. Had to reclaim up here. We are converting the numbers to say for us, 5984 is the number because that's what the conversion was for our time frame, right? There is an amount that is constantly fluctuating in the difference between the ES and the SPX because of that. It changes over let's say the month cycle. And so that's why the SPY, what is it? The converter that are found, this ES SPX converter, that's why this comes into play, right? Because it does it easier. But if you notice, this is updating consistently, which is a good thing for us. And what do I mean by it's changing? Okay, so when we did these numbers, this was on okay, so that's about a week ago. The 13th of, it looks like the 13th of November, I believe. So the prices have been, moving all around. But just to show you the price point of 6009, when we originally had it on here, was 5984. It's been a week and some change. The SPX, so this was the ES, the SPX for that was 5990 when it was 5984, let's say a week ago, right? The distance between ES and SPX, you'll see it get smaller and smaller, the amounts in between. And then at some point, and I believe the point that it changes might be that third Friday when we have the double witching and all of that. It seems like that is part of the catalyst for the numbers getting wider again. And then they seem to slowly come back together. But that's all it is, the way I remembered it. 24-hour cycle versus the part that New York is active, and then that's the difference between what's happening in those prices is what we're paying attention to. Because after all, you still just dealing with the S&P 500, and people are still trading the S&P 500. We might be down in New York, but just like we can trade other people's tickers as well, those orders still have to be filled at some point, right? So I'm hoping that makes sense. I forgot about who. I think, did Mr. Mack ask about that? I think Mr. Mack asked about that. But does that make sense to everybody? Did we clearly take care of that? I'm sure. I'm assuming yeah, because nobody just minded. So, but let's assume yes. All right. Kava. Whose idea was this to mess around with Kava? This must have been a Janae request.
Because we was talking salads, so it was
Oh
like,
yeah, that's right. The only reason I don't dislike Kava, well, I haven't had their food. I don't dislike their chart, but what kills me about them is like they have such for it to have not been traded that long. Man, this is the monthly chart, but they got some serious pressure coming from their wicks and stuff. All right, Miss Deborah, thank you so much. We're wrapping up anyway, y'all.
Actually, we don't
This
really
la-
have to chart Kava. I just gave that out. Somebody else wanted another ticker before we end. That's fine.
Well, oh, okay. SPX was the main one we was looking at, but I didn't hear anybody else drop another one. If anybody else wants to look at something, but on our checklist of stuff that we had, we've actually covered everything. Y Mancini, buyers levels, sellers levels. The buyers level is down and to the left. If you're trying to find it, that's most of us are cool with that. Down and to the left, and we're looking for the turnaround. And then from current price up and to the right is where we're looking for our seller zone. And most of us know that we are at all-time highs on most of this stuff. NVIDIA is hilarious, dude. This middle candle makes like no sense. This right here, what are we doing? Just ruining the entire formation here. But that's fine. Do what you do. I'm not so sure. I can't even find a decent. There you go. Up and to the left. Boom, boom. Seller zone, seller zone. You can do two things for this buyer zone, but if we kept it simple, we could probably just do this. Personally, I'll probably prefer this. This is a stronger leg out right here. Here's a gap, the gap that we were talking about earlier. Got the swing points where it turned around, gapped up to get past it. And there's a gap here. This gap was filled within a couple days. Doesn't always happen that way, obviously, because this one is still yet to be filled. And the buyers are pushing up right here. I just chose Riot because it's one of the Bitcoin that seems to be popping up. So I'm looking at looking at a list of stuff. So I think we covered everything on the checklist. So we're gonna free you people and release you to your Saturday. You hope that you got something out of today's session. Once again, we apologize for our tardiness. Thank you again, Janae, for getting us on track. Appreciate you, Chief. Appreciate you. That's what y'all got to do, man. When something don't seem right, y'all got to inbox us. Let us know. We ain't dropping the ball on purpose. Trust me. All right. So we will talk to you later, Carolyn and Janae and Lisa H and Noni and Tanya Harris. And
Noni, what time is it?
Hi, it is 24 minutes past 7
PM?
PM, yes.
Oh, so that's not bad.
No, it's not bad this time.
wow. So in your time frame,
At least 7 hours.
okay, that's what I was gonna
Yeah.
ask. So in your time frame, what is the best time for you to get on?
I get on when we do the morning things because that's around 4 p.m. for me. So usually I can get on. I never get on when it's the evening things because that's around 4 a.m. for me. So some things you guys do between 2 a.m. and 4 a.m. in my time, and I'm usually sleeping then. So I just do the morning calls with Mancini numbers. And on Saturdays, I do this call because that's a reasonable evening time for me. Yeah.
Okay.
So you don't do 5 o'clock on Sundays?
No, because it's 1 a.m. or 2
It's
a.m. my side.
okay.
Yeah.
And then Mancini's the next day for you though, right?
Yeah, so Mancini for me is usually it's morning for you guys. It's about 4 p.m. or 5 p.m. my side. So that I dial into.
Ah,
Yeah.
Wow. Okay. You know, I
yeah.
mean, listen, I am so glad that you're a part of this group. You know, because we didn't really have to think about what's going on outside of the Eastern time frame,
Yeah.
right? Like the most that we've been talking about is East Coast time frame,
Well,
right?
I think
Yeah.
Tanya is 1 hour ahead also. She's central.
Right, but that's what I'm saying. I'm Central, so my biggest adjustment was East Coast. So I switched all of my clocks. Everything in my house is now on East Coast time. So
Are
it
you
never.
serious, Jamie? I
Oh
would be
yeah,
late for everything.
no, I'm not anymore.
I would be late for
Oh
everything.
no, no, because you mean everything that's in Central Time?
Yes, I'd be
Oh
late for
yeah.
work. I'd be late for church. You
Listen,
changed all your clocks?
everything is switched to East Coast, and I do everything in reverse. If I'm doing anything local, I got to remember to reduce an hour.
Oh my Lord.
Wait, Tanya, you're 11 o'clock, right? It's 11 by you?
Yes, it's 11:27.
Yep,
Oh, so getting up earlier is what you got to do.
yep,
Yeah.
Got it.
yeah,
Yeah.
yeah. It was just easier. I mean, listen, Snoop said, "With my mind on my money and my money on my mind." Well, it so
Exactly.
Well, I
happens.
can't be mad at that.
Look, it just so happens that my money is East Coast. So my mind needs to
This
be
is not
East
gin and
Coast.
juice, okay?
Yo, listen, my microwave is on Eastern time, okay? I'm not here to play games, people. But it never dawned on me,
Oh,
it never
wow.
dawned on me until Noni that, yo, we need to account for people that's not even in the United, because you know, Arlissa was in Bahrain. But once she moved back to the States, I think maybe some people from Canada joined, but they still seem to be on East Coast time. So 7 hours, I don't even have a reference point for that.
I think it's fine. I tell you what, the times for trading are the times for trading. If you're trading on the New York Stock Exchange, those zones are those zones, right? So we have to adapt either way. Saturday in my world is still fine because 7 o'clock is a reasonable godly hour. And anything else, as long as it's recorded, when I wake up, I'm able to join. So if it's about me, I don't have mimitis. It's really fine. I think that's why for me, I always ask, do we have the recordings? Where are the recordings? Because the 1 a.m. TM ones, I'll be sleeping. Yeah.
Okay. Well, no, what I'm thinking, thank you for that, but what I was thinking was